Good morning and hello everyone. Today is Tuesday, September 22nd. Welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you guys this morning. Promendra, Eileen, always a pleasure to see you guys. Joe, Kyle, Michael, the pleasure is mine. So good to be back. Obviously on the back of non-farm payroll or the FOMC release, last week we haven't had a live webinar, so it's good to be here, guys, to sort of discuss the aftermath of what we've seen. Fed held. A little bit more on the dovish stance with regards to policy. You still see some guys that are calling for this year, but as it stands right now, guys, it looks very, very unlikely. As we've been postulating here in the webinars on SB for a couple of months now, you know, the global environment is extremely difficult for the Fed to even think about tightening at this point with so much risk on the horizon. Eileen is saying, can you get a chance this morning to explain corrective slope trend lines you're using? What are they? Thanks. Eileen, absolutely. If you remember back, it was the Euro-Yen setup, Eileen, and we noticed that each of the corrections over the last 10 corrections were following this same singular slope. We came back and tested that as support last night. We broke below it, validated the downside bias, and you saw a little spill over there in Euro-Yen. So Eileen will definitely go over that setup for sure. As we go through these setups, again, we'll go through the intraday update from last night. Obviously, as always, I want to see your questions, your trade setups, guys. If you have any questions, feel free to throw them on the message board. Anyone who's new to the webinar, I see a lot of new faces in here as well. Don't forget, at any point during the webinar, you can always click on the camera in the top right-hand corner of your GoToWebinar screen. It allows you to take a screenshot of any of the charts that you see here if you need them for future reference. All right, so let's jump right in. The current scalp I'm in, just as a quick disclaimer, is the dollar yen, actually. I didn't jump in the euro yen. That was also a great entry last night. There was a compelling entry and an opening range break, clear as day on dollar yen. So I'm still holding a portion of that. We've already shaved off some of those or some of that position. But let's just jump right into the euro crosses, and then we'll jump into the yen crosses, guys. And as always, like I said, feel free to throw out any questions or trade setups you want to review. So euro dollar, here's what we look like last night. So on the back of Friday, so you saw that massive rally into 114.35. That was the actual stretch high from April. And the reversal that you saw on Friday, certainly from a momentum standpoint, coming right into 60 and reversing to the downside, coming right into that high, reversing to the downside. It wasn't, well, I guess it was an outside reversal day. Took us right down to that former slope resistance, now support. The follow through into the open of the week yesterday was a tell, and you want to be very mindful when you see these things. The momentum signature still has a trigger that's in play all the way from the lows in March. Here's what it looks like on the intraday chart. So the idea here was, watch, look at that 1228 into 1208, huge region of resistance. We'll come back to the dollar in just a moment, but what I wanted to show you is this. That 1208 level is the monthly open for September, the 200-day moving average that you see there in green, and also you had a key 618 retracement at 1228. A basic trendline resistance off last week's high also converges on this region. So the game plan was, look for a break of this region. If we break the upside, look to play the recovery towards 112.80, the median line structure off the highs here. If we break the downside, we'll be looking to sell rallies into 111.32. And that's going to be a complete 100% extension off the highs. So you saw us come into this resistance, test it, it held overnight, we kind of dribbled lower, and you haven't really gotten a clear definitive break. Here's what it looks like on the intraday. Before I move off real quick, I also just want to point out that the 100-day moving average is right here at 111.46, and that's just below the low that we made so far today. Here's what it looks like on the intraday. So you didn't quite get the clean break that we would like to see on a range play like this. You saw that we kind of failed right ahead of that 1208 monthly open, and there hasn't been much play here, guys, to be quite frank with you. I still think it's going to be on the menu, and we'll keep it on the radar for the next 24 hours, but we're essentially looking for either a more definitive move to the downside, sub 1132, or to play the recovery to the upside here. The better play here on the euro weakness was the euro yen. And that was the other scalp featured last night. So broadly speaking, this is the formation I'm thinking that we're working with. It's too early to tell. We've only gotten one rebound off the median line there, but certainly positioning-wise, it does look like it's guiding price action pretty well. And on the broader scale, this is the one that we added recently. Okay, so that puts the invalidation level still up at 113.66 for the broader downtrend in the euro. Near term, don't really want to mess with this thing. You're even looking for that break below 111.30 with some definitive price action, selling rallies, or the pop through here. So we'll keep this on the menu. Haven't really messed with it so far this week. The best play would have been the break of the initial weekly opening range here yesterday, but at this point, you're just below key support. And as long as you stay below this region, the risk for a spill lower does remain. Okay. Note that you're getting some divergence into the lows here. So again, a rebound into the U.S. Open back to check 1208 may be on the cards. Either way, the levels are pretty clean. We just need a little bit more definitive price action here on the euro dollar. A quick segue before we move into the euro yen. Here's what we look like on the board, by the way, to start off this session. So you can see that the dollar is stronger against most of its major counterparts, save the yen, which is the play that we have on play right now, up 0.6%. Euro right in the middle of the pack. Real lackluster, just a decline of 0.29%. Aussie held resistance and saw a break of that formation to the downside we were talking about on Sunday. That's down 0.67%. Equity markets also taking somewhat of a nasty spill here. You got the DAX down 3.2%, CAC 40 down 3.28%. Asia Pacific also had a little bit of a lackluster night. Nikkei 225 was down almost 2%. Interestingly enough, Shanghai did squeeze out a little bit of a margin at 0.9% on the upside. But the broader trade here, guys, just remains that risk is heavy across the board. And if we take a quick look at U.S. equity futures, you can see that we're poised to open sharply lower across the board here as well. Dow Jones down 250 points ahead of the open, 31 handles on the S&P. So risk off, dollar seems firmer, and that seems to be the game plan here as we walk into the U.S. session. Okay, moving right along. Euro yen. Here's what the euro yen looked like. And again, a little bit better of a setup. You had a wider ATR. This was working with about 31 pips. I think euro yen was just slightly bigger. Here's what it looks like on the daily. So last night, here's what we look like on the daily here. And this is the corrective slope, Eileen, that we were talking about. I'll go over this in a moment. But looking at the euro yen here, you can see that the move we made on Friday, boy, it broke through such a critical resistance region, and the reversal, or on Thursday rather, on FOMC, the reversal post-FOMC took you right back below that region. Former median line off the yearly lows, the upper median line parallel off the yearly highs. And while we did probe through that and close, the reversal the following day, momentum held below 60, and that basic trend line resistance trigger keeps the focus to the downside. Okay, it's the same exact setup. So we closed on Friday right at the 200-day moving average. So opening up the week, obviously I was out, guys. I did squeeze out a piece for you guys on Sunday, but the open on Sunday pushed through that 200 again, or held above it, and then we closed well below it on Monday. So that keeps the downside bias in play. We were sitting at support yesterday at 34.82, and here's what it looked like on the intraday. The setup was basically predicated upon this one chart. And if you look at this, Eileen, this is kind of the chart that we had presented a couple of months ago. Look at all the corrections that we've seen in the euro yen dating back to the beginning of the year. I'll show you in the real charts right here. Let's just scroll back. So every correction lower that we've seen in euro yen has followed this basic slope, okay? It's just resistance, just trendline resistance, Eileen, nothing fancy. And what we did is just copy it to the highs. You can see that the correction was in play below this. It broke, you saw a pop higher. That same slope was support. right? On this correction to the downside, it was in correction mode until we broke. That saw the pop higher. On the move down, below that slope until we broke, tested it as support, moved off. Okay, late July, on the way down, breakthrough as resistance, tested as support, move off. Early August, on the way down, broke it as resistance, checked it as support, move off. Are you getting the picture? It's all the same slope, guys. Every single one of these orange lines is the same exact slope. Still looking lower. Broke it. We sat on it as support for literally 3 weeks. Same slope as resistance. There's the break. You saw the run. Last week, looking lower below that same slope. Keep looking lower. Keep looking lower. You saw the break. There's support. So we start off the week with that same corrective slope now as support. You opened on the Sunday open, you rebounded right off it. On the pullback yesterday, that's where we were trading into the close or into the open of Asia trade. And we were highlighting, look, at this point, you're sitting on that corrective slope, okay? If it's going to rebound, this is where you'd expect the rebound to come from. If it breaks below this, well, we just went over all the previous scenarios of where this corrective slope offered support. So if you break below it, you're looking lower. So the break below this, it was really the break below the Asia Pac opening range, which is 34.70. Gave you a stop against that 34.90 region. You're looking for about 35 pips, nice healthy run. Initial targets were down at 134.20 and 133.80, and those have already been taken out. So at this point, yesterday, the bearish invalidation level, which was up at 35.87, which just happens to be the September open, near term, we're going to drop that bearish invalidation level right down to 134.80. Okay, and as long as we stay below 134.80, which is, again, Eileen, the corrective slope, the same corrective slope. Oh, I stand corrected. I'm sorry. This is just a basic trend line off the high. But as long as we stay below that near-term resistance, we'll continue to favor the downside here in Euro Yen. So next target up on tap is 133.33, which is the nice opening range high for the week opening September 6th, and also a 786 retracement off the low. Near-term resistance 34.20, bearish invalidation 34.80. So as we look into these levels, we'll be looking for short triggers. If we break lower, we'll be looking to sell rallies towards 33 at this point. Yeah, we'll keep that 33. Just want to move this down to that swing low there. 32.95 would be the next near-term target. Eileen, does that make sense, what I meant by corrective slope? Little tidbits here, guys. You can always find a little bit more of a tell when you're looking at these positions and you see these kinds of formations pan out time and time again. Can be very telling as to the directional bias and where the critical regions are that you'd want to play it against. So as we came into the support region yesterday, it's 50% of the advance. You have that same corrective slope. It's key, right? If you break below, it's a conviction short. If you rebound higher, or if you would have gotten a break of the Asia opening range high, you would have looked to play it back towards trendline resistance, back towards 35.60. So Eileen, I hope that makes sense. Let me know if you have any questions on that. Is the mirror corrective slope unique just to Euro Yen? So this phenomenon does happen across pairs, Eileen. It's not going to happen at all times. It's great when we can identify it, but it's not something that's going to be prevalent across all the range. And you don't have to ask me that, Eileen. You can see that yourself. All you got to do is just take a basic trendline resistance and mirror it to the corrections and see if you've seen responses. I mean, the first time that we looked at this, I think, was late July, when we had noticed that this slope was actually offering really nice touches, resistance, right? Resistance, break, support, move off. Here it was clear resistance, breakthrough. That was the beginning of the rally. And to identify them, all we got to do is just look back in price action. So I wouldn't want to say it's explicitly unique to Euro Yen, Eileen, but this is the one that we've been able to identify and we've been following for the last couple of months. All right. Let me know if that makes sense, Eileen. I want to make sure I drive this one home because great question. I'm sure other people had questions on that. Tried to sort of annotate it as clearly as I could here. Um, Eileen says they seem perfect parallels. Yeah, they're all parallels. Absolutely. Dan Norberg saying Abomination playing out nicely. Dan Wilcox asking Mike, have you touched on dollar yen yet? No, I have not, Dan. We'll take a look at that in just a moment. Just want to make sure that we're clear on this before we move off. Eileen says, I see what you found. Clear. Thanks. Makes sense. All right. Right on. And Eileen, I don't got to tell you, if you have anything else or any other questions, just feel free to stop me. All right. So I know it's a little bit of a messy chart, but looking lower, testing support near term, bearish invalidation 34.80. I don't have a short on this because I didn't want to put too many of my eggs in one basket. I am still currently holding dollar yen, so both Dan Wilcox and Dan Norberg want to take a look at that. Let's take a look at dollar yen. So if you guys are on the swing side of the trade, they were looking for a short near 120.46, if I'm not mistaken, was Jamie's setup last night. It was a great entry. I mean, the guy nailed it. It's right on point, as usual. And the pullback now coming into this region here, which represents the 2015 open. That comes in right around 119.88, if I'm not mistaken. So we've tried to break below this level, guys, on 4, 5, 6 different occasions with failure to do so. And in fact, every time we've tried to probe lower than that, we've seen a really strong rebound off. So today is going to be paramount. We'll want to see us close back below the yearly open. Your key support that you really need to get through to the downside still is down here. It's basically near last week's low. You got a basic trend line support, the median line off the highs, and that coincides somewhere in the range of 119.17. Interestingly enough, let me jump into, let me show you guys this first, actually. Sorry about that. If you take a quick look at the seasonality page, so if you go to long-term charts and take a quick look at seasonalities, we don't talk about this, we haven't talked about this quite as often recently just because seasonalities and near-term price action have been sort of skewed with all this nonsense with the Fed. But if you take a look at the seasonality charts, guys, and by the way, I just whizzed through that. If you're newer, the seasonality charts can be found under long-term, and then on the right, you'll see something that says seasonality charts. Okay? Click on the dollar yen, and you'll see something very interesting. You'll see that over the next few weeks into about mid-October, seasonality does call for a lower dollar yen. So it sort of meshes well with the idea of maybe risk continuing or looking for a test of the panic lows that we saw back last month. For a dollar yen, at least a pullback towards that 119 handle again. But we do have, seasonality on our side over the next few weeks. So certainly for, the perma bulls out there, for the dollar perma bulls, they're obviously something they might not be taking into account here. So that being said, not justification for a trade, but certainly more validation of our idea does call for a dollar yen to be a little bit heavy here over the next couple of weeks. So with that in mind, let's look at the intraday chart. So I was working with this formation. If you were looking at the scalp charts last week, this is the formation that we were working with. The topside break here couldn't really give us a valid push through. You saw some divergence into those highs yesterday. There wasn't really a valid trigger on the 30-minute, but the 5 panned out pretty nice. And the 5 was basically a break of the Sydney opening range. So if you look here, by the way, this indicator you see on the charts is called trade sessions. You can find this on fxcodebase.com. Just highlights the highs and lows for each session. But if we look at the Sydney Open, which is in the turquoise here, bright blue, the Sydney opening range low came in at 120.46. The opening range high came in at 120.60. Okay, you have the weekly opening range high just beyond that. We opened up Tokyo. Tokyo had about an hour of trade before we finally pushed through the Tokyo and Sydney opening range. Short was issued there, stop against the highs. You're looking for about 28 pips per scalp. Now, I wasn't about to stay awake and watch this trade, so I kind of left the target open. I brought my stops, or I left my stop against that high. Once we woke up this morning, you look here, you had some divergence into the lows, with the momentum giving a trigger break back above 40. It's not what you want to see if we're still going to remain in a super downtrend or in the immediate downtrend that you're looking at. So we peeled off a half or a quarter of the position here, still holding 2/4 of it. Stops are inside break even, just above those lows. So if we do rally back in towards the highs, we'll go ahead and take that 10 pip profit. But long story short, looking for a drop initially into the weekly opening range low, i.e. a basic 618, and that still takes you into 119.60. So that's where I'd like to shave off another quarter of the trade. At that point, we'll bring our stops up to the opening range high here in New York. But it looks good. It looks good. I mean, it's not the cleanest on the formation here, or at least on this pitchfork off the highs. But broadly speaking, the chop fest that everyone's been talking about in dollar yen has been offering some beautiful plays. And right now, while we're still in this range, you'd look for a bottom or a test of the bottom part of the range. Again, 119.22 would be 764, but this is sort of key zone. Whoops. On the near term, you'd be looking for. Now, the only caveat here is we are sort of light on U.S. data this week. There is not much on tap except I guess you could say the U.S. non-durable or durable goods report that comes out on the 24th. That's 2 days from now. Yellen specifically and explicitly did note that they were looking at that. So that's something you may want to pay attention to as we head into the 24th. We'll have the webinar open, obviously, so we'll cover that live. But we are expecting contraction of 2.3%, which could just further dampen expectations. At this point, the biggest event risk for the week is going to be the third read on second quarter GDP. We are expecting a hold at 3.7%, and that comes in the 25th on Thursday. So for U.S. event risk, which is probably the biggest mover for dollar yen, that's one thing you're going to want to keep into account. As far as Japan is concerned, CPI on the 24th is going to be the biggest read on that front. And we'll go over those event risks and their possible implications as we get closer to those reads. Any questions on dollar yen? Still a nice setup. I'm sure Jamie will keep you guys updated from the swing side of things. From the intraday side of things at this point, again, wouldn't be surprised to see a little bit more of a concerted rally as we head into U.S. trade. We'd like to favor still the downside immediately while below the opening range high, the Sunday high there, i.e. this 50% retracement, 120.15, 120.20. We'd like to maintain a bearish bias immediately below this region. Gary, great to see you. He says, I'm not sure if that's an angry R, Gary, or what. He says, the abomination, what a pair. This is the pair I've learned to trade on. It's been a fun and painful at the same time. Not sure my bank manager would agree. So if you guys are wondering why everyone keeps throwing out that term, for the longest time, for years, I've called dollar yen the abomination. Early in my career, the dollar yen, which was also very, very fond of it. I mean, I placed a lot of trades on this on the desk. I took a real steep losses on dollar yen back in the drop, way back on what was that, 2006, 2005, when the thing started really dropping off. I was on the way up, rallying this whole play, and as the financial crisis hit, I was the guy trying to call the low. So I got stopped out of so many long exposures on that 3-year, 4-year down cycle that for the longest time I called this thing the abomination. So, we can have our biases, we can joke around about it all we want, Gary, but at the same time, man, when the technical clarity is there, it can be a great trade because it tends to react very strongly to U.S. data. It's all about whether the technicals are sort of in line with what your expectations are. Gary says, it's a fun R. I'm doing okay-ish. All right, Gary, I'm glad to hear that. All jokes aside, though, the abomination can really tear you up, so just watch out. One other thing, guys, to the upside, just want to highlight one other thing. That trendline resistance off the high for this consolidation formation also coincides dead on today over the next few days, I'm assuming, with the 200-day moving average, and that's at 120.80. So we've already highlighted that on the scalp chart as well. So in the case that we do invalidate this near-term downtrend, that's going to sort of be the initial target on the upside. All right. Okay. Next up on tap is the British pound. Another trade that is, I think, came into the sweetest short zone ever on Friday. Again, as I guys told you, I was out at a wedding this weekend, so I was out on Friday. But um, I think this entry was a gift to humanity and all traders. I was talking with my man Christian Kerr earlier last week, and he has a very important cyclical time cycle that also comes in right around the start of this week. This was a very, very nice region here, basic median line parallel resistance. You had a former sliding parallel support, now resistance. You had the 618 retracement of the decline. In fact, if you take that retracement, take it to the real highs, the 618 caught the high exactly almost, just a couple of pips extra. So the rejection of this region, the pullback, and certainly the move back below the 100-day moving average, in today's break, if it does close, this formation really shifts the momentum back to the short side. Here's the momentum trigger on the daily chart as well. Remember, we'll need to see that close. Taking a quick segue back to the seasonality charts, if we do look at the British pound, you can see, again, that cyclically, you look for a peak over the next pretty much into the end of September, early October, which is basically where we are now. Okay, and you would expect to see into the November trade calendar month some further weakness, and certainly coincides pretty well as an analog with what we're seeing now, and supports the idea that if we do have this break today below 54.50, 54.60, to continue looking lower here in the British pound. All right. Again, these seasonality patterns, guys, something that we can use to help us either add conviction to a trade idea that we have, meaning a little bit more leverage, a little bit more aggressive on the targets, or lighten the load. This is not something I'll explicitly use to validate. Let me take that back. This is not something I'll explicitly use to actually trigger a position or give me a bias. But certainly if the price action that we're looking at and the technicals are suggesting we should be looking lower, you look at the seasonality chart, well, in fact, over the next couple of weeks, you'd expect a high to be made and a drawback in sterling. That's where the benefit is. And this is also going to be very similar to what we're talking about when we start looking at IDO. For those of you who don't know, IDO is live and ready to go. This is just a soft launch only for current clients. So feel free to mess around with it. It's a great tool. We'll be shooting a video, me and Jamie today, on a little bit more on a how-to for IDO, and that should be posted up on SB shortly to give you guys a quick reference tool on how to use that. But looking forward to that. Again, the SB premium accounts that will be offering IDO will be $199 at this point. If you want to purchase IDO alone, it will be $99. And for anyone who is a current subscriber, again, you guys are going to be grandfathered in for the life of your subscription. So enjoy that. All right, so before I move into gold, Bernard, I just want to look at the scalp chart here for the sterling. So now that we have sort of a broader picture of where the sterling is, the risk for a trigger break here in momentum, the risk for a breakdown below key support, and a major pivot in price going all the way back to the start of the year, here's what it looks like on the intraday. Okay, pretty darn clean. So this was posted earlier in the week on Sunday's radar charts. Here's what the scalp looked like, okay? And certainly we opened just below resistance. This was going to be the near-term bearish invalidation level. As long as we held below that, you wanted to be mindful of a downside break or a test of 54.60, which was the 618. Well, that's exactly what we just took out an overnight trade. We broke lower median line parallel and came right into that 618 at 54.60. We sat there for a couple hours, but there's a subsequent break. Next downside target, you're looking at a pivot at 154, but really 153.45, 153.35 is the next downside support here for British pound. At this point, bearish invalidation gets dropped from 55.67 down to 55.30. And 55.30 is the actual 100-day moving average. Dropped to 55.29 overnight. Let me just drop that down. All right. So as long as we stay below that, you're looking to sell rallies. Again, you're in oversold condition here, so I wouldn't be looking to try to fade this by any means whatsoever. We take a quick look at the 5-minute chart here. Let's see if there's any. Oh, well, this was a trigger I was looking at before the webinar. Looks like it cracked just a couple minutes after we started. So guys, this is a 1-minute trigger of the sterling, and definitely a trade I would have been very interested in taking. We were checking the highs here towards 55.50. Your stop would have been against that 80 region. You had a nice trigger, a 4-point touch trigger to the downside after holding 60 as resistance. You're looking for a move down towards that 54 handle. I still think you'll get it here heading into US trade. Remember, in oversold condition, do not want to fade that. That's when the market has the most push behind it. Okay, so just keep that in mind here as we open up US. Any questions on sterling? Could be in for some serious moves here in the pound. That was a really nice reaction to that resistance range. Michael Greer says, I got the signal too, in it for 17 pips already. My man. Great entry. Great entry. So watch that 31 pip target. If we get into 54, I would look to take some off the table, bring your stops in. If not, close the position completely, because you did see a big stretch today on the sterling, and I don't want to overplay the levels just yet. That being said, I like the broader trade irrespective. And as far as event risk, I just took a quick look for you, Mike. As far as event risk is concerned, you're pretty limited. There's really not much out of the UK this week. So we'll be looking for the dollar price action to broadly drive this. And we're seeing that dynamic now where risk-off environments are starting to aid the dollar. If you look, and this is something, again, that could be really helpful for you guys, especially on the intraday. If you look back over the last couple of weeks, when you saw pre-FOMC, when you saw markets rally, right, the dollar would rally with it. If the markets turn down, the dollar would turn down with it. Why? Why is that? Well, that's because of the perversion, excuse my French, of the markets with the obsession with what the Fed's going to do. As markets rallied, people kept on pricing in, oh, well, the Fed has to tighten. The Fed has to tighten, which means higher rates, i.e. stronger dollar. Market used to sell off, oh, well, the Fed can't tighten. The Fed can't tighten. No higher rates, lower dollar. Now you're getting that shift again where we're going back to the old school risk on, risk off, where markets are selling off. Everyone's just going into the relative safety of the greenback. We haven't seen that flow really kick in yet, but the dynamic is changing, and you're seeing that here today with markets trading heavier across the board and the dollar maintaining a pretty nice stance. On that note, here's what the dollar index looks like so far. So to start off the week, the resistance level that we had noted on Sunday was 11,980, a basic 50% of the drop off of those highs for the month. You had a former lower median line parallel, and you had the upper median line parallel. We've now made it through all of those. And the next objective target to the upside is going to be the monthly open, and that comes in at 12,028. Coincides nicely with a broader median line formation here off the highs. Again, there is no conviction that this median line is in play yet, so we'll keep that in mind. It's too early to tell. We haven't gotten any major concrete rebounds off it. That being said, coincides pretty nicely with the monthly open now, just higher from where we are. Here's what the intraday for the dollar index looks like. And before I move off, just a couple of quick notes. At best, guys, over the last couple of months, the dollar from a momentum standpoint is still sideways. Okay, here's the dip into the lows that you made in May, which was on that major downside stretch. 60 hold, 40 hold, 60 hold, little dribble below 40, but that was the panic sell-off in August. 60 hold, turn ahead of 40. Okay, so there's not really much of a clear definitive directional bias from the momentum standpoint on a daily basis. The only thing I do want to highlight is today's low, and we're going to use that as near-term support. 50% retracement, again, that sliding parallel or that lower median line parallel, and that basically gives you this region until 11,980. Here's what the intraday chart for the dollar index looks like. So again, you saw this chart on Sunday. Whoops. And here's what the daily looked like on Sunday, right? We had just rebounded off of this region. Again, you had the 200-day moving average, which was tagged, and the pop higher, 980 was resistance, 12,028 is the monthly open. We've taken out 980, obviously. 12,028 is on tap. Here's what the intraday chart looks like, okay? Just a quick reference on guidance here. Levels are the same, 1228, next resistance target, 1250. We would need to break near term back below this same region of resistance, former resistance, now support, and back below that confluence, and that's 11,980, 11,982. That said, still is constructive above that region. And look at the momentum signature, you are getting some divergence, so you could get a pullback, but as long as that holds support, you'd be looking to buy pullbacks on the dollar index. Questions on the greenback. Again, an equally weighted index. I understand if you're trading stateside, you can't necessarily trade this asset, but a great way to be able to ascertain base dollar movements. So we're looking at its inception, equally weighted euro, sterling, Aussie, and yen. 3 or 4 most liquid, most traded currencies against the dollar. All right, so I'm going to jump into your questions. Let me know if you have any questions or trade setups, specific pairs you guys want to look at. I know Dan wanted to take a look at Euro Aus. I haven't done so yet today, so let's do that. Okay, let me come back to this one, Dan. The only thing I want to do before I go over Euro Aus, I want to go over Aussie Dollar. So we talked about Euro and sort of the relative positioning, excuse me, of where that trade is, right? Kind of waiting for this mini range to break. Obviously, on the daily chart, there is a risk for a steeper decline. If we break below this, you're looking at move possibly right into 110.70, which is still another 100 pips to the downside. So Euro, a little bit undefined at this point. You've had a 3-day massive drop. You have a trigger here, which is looking to hold, or looking as support rather in momentum. So a little bit lackluster on the Euro. But with that sort of view in mind, here's what Aussie Dollar looks like on the daily. And certainly another trade that was highlighted on Sunday with the fact that, I think this was on the FOMC, with the fact that we were heading into FOMC holding just below resistance. And the resistance region was very well defined. It was a 236 retracement just off the highs. This is a long dated 618 retracement from the advance off the lows all the way back in 2001. Yes, in 2001. And that swing high from last month. And essentially, if we broke through this region, you would look for a target right here at 72.99, which was basically also the sliding parallel here for the formation that we've been in since the October 2013 high. Long story short, guys, obviously you can see we held on a closed basis. As much as it stretched higher, it was a quick, clear, definitive reversal. okay? And it's really helpful sometimes just to bring the trade into a line chart, guys. All this does is highlight the close of each session, kind of can smooth out some of the noise, especially if you get event risk that charges major spike highs, major spike lows. Um, Sometimes it's just much more objective to sit back, bring it into a close, and see what the levels really have been, the concrete levels the market has been reacting to. So looking at this at this point, I do think you're at risk for a little bit more of a pullback on this, Dan. He says, I bought Euro at 156.30. Commodity block looks weak. It does. It does look weak. I agree with you on that. So Euro Oz might be a nice long because although the Euro is lackluster, Aussie can get a little bit more of a pullback. So I have to agree with you on that. We'll look at Euro Oz in a moment, but looking at the Aussie dollar at this point, here's what it looks like on the intraday. Basic retracement off the low is what you want to work with. And I can't remember if it was the intraday update from the day before. Here it is, yeah. So here's what the Aussie looked like, okay? And this was the invalidation level or the bullish validation level, I'm going to call it. We were essentially looking for this level all last week. We probed through and ran through it right on FOMC. We pulled right back below it and closed below. Following day, ran through it again, closed below. That adds the more validation to this. We couldn't even make a tag of it, and here's the downside break. So a basic trendline support still gives you a little bit more downside to go. All right, the 618 from the ascent and basic trendline support coincide somewhere in the range of 70.30, 70.37 right here. I guess that's 70.40, 70.37. Nice clean channel formation there also adds further conviction for that near-term support heading into that 618. Not bad. Not bad. So you probably get a little bit of alleviation bounce if we get a break above this region, but I'd be looking to sell rallies below 71.28, 71.30. So Aussie targets there. If you want to take a freeze frame of this screen, guys, these are the near-term targets we'd be looking for. That being said, any Aussie weakness, Dan, is going to be good for you, right? Is definitely going to be good for you. We'll take a look at dollar CAD too, because I think you're right on that front with the com block. But near-term support and possibly a little bit more of a move lower here in Aussie in the near term puts Euro Oz for a risk of a pop higher. And again, we looked at the near-term support here. Right. So here's the only thing I'm going to say about Euro Oz. I remember this setup vividly because back on the start of September trade, this was highlighted into the end of August, early September. We were highlighting it on the intraday page daily, if you guys remember. It had a real nice, healthy ATR back here. It was like 70 pips as a quarter of the daily ATR. So we've kind of simmered down a bit, and the last couple of weeks have been very lackluster. The only thing I want to point out is 58.30 and 58.40 has been such a pivotal range. On the initial pullback after the panic sell-off into the end of August, that was support. It stayed as resistance almost for a week. After we broke, it was support again for a few weeks. Clear-cut pivot in price last week. And now that same region is the weekly opening range high. So the only thing I would say on this, Dan, is watch 58. I'm sorry, it's 58.12 into 58.30. A little bit bigger of a region, but so is your ATR. As near-term resistance. If we get through that, I do like a little bit of a push higher here. So let me snap these trend lines real quick. There we go. And I just want to show you this operative structure here, right? Hasn't been the cleanest, but here's a quick break and recovery. You can easily call this a false break here today, specifically if momentum makes it through 60. I'd be looking for that crawl up towards, 158.30, 158.12. And I wouldn't be surprised, Dan, if a basic trendline resistance off of that early September high takes you right into that region. Yeah. Pretty clean. So that's really the level that you need to get your mind around, or that's really the level we need to clear, and that's what's going to be the near-term bearish invalidation level. All right. Entry 56.30, really nice, Dan. Love the entry, man. Love the entry. Hope that helps. Dan, let me know if you have any other specific questions on Euro Oz. You got me interested in this one now. The only thing is if the euro breaks that support, you might see some euro weakness and Aussie weakness, which could cause a little bit more of this. But broadly speaking, I think the near-term targets, or at least the near-term key levels, are pretty well matched out here. Gary says, if possible, would you be able to look at dollar MEX? Would really appreciate your overall view. Thanks. Gary, it's not something I really take a look at, man, but I'll take a quick glance for you. I don't really follow it, from a scalping standpoint. It's not really my cup of tea. Look, if you're trying to call the broader turn in dollar MEX to the downside, I do think that the broader risk on a longer term structure is for a little bit more of a concerted pullback before you continue higher. Obviously, the long-term uptrend is still in play. My only problem with this is I don't know if the correction is done. Looking at the momentum signature from the lows they made in 2014, it's clearly constructive. 60 break, 50 hold, 70 break, 50 hold, turn ahead of 40, turn ahead of 40. You just broke 60 on that last stretch. You're basically looking for long entries on this unless you see a much more concerted break in momentum. So I don't really have a game plan for you on this one. I can see if we can highlight some levels here if we've made any significant extensions off that high. Yeah, it looks like a simple ABC 100 two equal leg down correction, which is always good to see. This level that you see here in brown is actually a 2618 extension off the lows that you made for 2013. See if there's any symmetry here. Not the cleanest. Low day close comes in right around here. 1660. Yeah, either way you look at it, I have us at resistance right now. Okay, the 50% retracement off the high, whether it's channel resistance or whether it's the 50, you also have that pivot that you saw there earlier in the month. So either way you look at it, I have us at near-term resistance. Um, Again, I don't typically scalp this, but if you put a gun to my head, Gary, I say I would still think that you'd get a higher stretch here, and you look to play inside the range. You know, this is a pretty critical region here for dollar peso. If the broader dollar correction still has a little bit more to go, you'd look for this rally to fizzle out somewhere near 94.20, near the monthly opening range high. That being said, the broader uptrend is still what I would be looking to play if I had to trade this. I'd be looking just to pinpoint my entries. Last week's dip here on Thursday on FOMC was probably the best dip you're going to see over the near term here. Um, Really nice pivot in price, huge region of support. So take those levels for what they're worth, Gary, but I hope that helps on dollar peso. Again, not typically a trade I get involved in. Where is Bernard? Bernard, can you please look at the DAX? Sure can. So here's what the DAX look like. Gary, feel free to let me know if you have any other specific questions. DAX for Bernard. DAX. Ah, okay, big region of support. Big region of support. Why? You're basically looking at a 2618 extension from the high. More importantly, the low day close. Okay, so the low day close comes in here at 9,639. Right now we're trading at 9,640. Okay. Um, I don't know what to tell you, Bernard. This is pretty big right here. If that breaks, you saw that we tested the yearly range low on that spill last month. That's essentially where you'd be looking again. And that level coincides with the median line off the highs. Just at that swing low, which comes in at 933.40. Quite interesting. Let me adjust some of these levels real quick. And that's the monthly opening range low. And here's the monthly open. Okay. So here's what I would say on the DAX. And again, I'm just going off the fly here. I don't actively trade this. Bernard, you know that. But here's what I would say on the DAX. I would stay bearish below this region, which we just tagged as resistance today and moved off. This is the monthly opening range low. So objectively, if we're just to look at price action in and of itself, the opening range break here would suggest a downside bias sub 9,886. Obviously, momentum, we've been looking at that for the last couple of months, is still super bearish, right? Ever since the divergence signal, you got into the April highs, you saw a 60 break here, and here's a turn ahead of 50 back below 40, or a 40 break rather here, and we're turning back below. So it looks lower. Near term, I would stay bearish below this region. The only thing that would put me back on the constructive side would be a break back above the monthly open, and that's 10,239. You got the yearly low day close right there at 9,460. And then again, like I said, 764 off the lows there takes into 9,306. Pretty big region for the DAX. Pretty big region. Let's see where that 100%. Bernard, does that help? Just want to make sure I got you on that one. And in fact, just on the near term, this is going to get messy, but just bear with me. I just want to see what this looks like. Oof, there's a 618 too. Yeah, it's a pretty big region, man. Watch it. The 1618 extension right off the high comes in right at that same region. So any way you look at it, you're testing a near-term support structure here. If it breaks, soft target at 9,459, but more importantly, 9,300, 9,306. All right. Bernard says, thank you. Very helpful. Right on, my man. Anytime, man. Can you look at gold too? Sure. Here's what the bullion trade looks like. And we are running low on time, so I'm going to try to run through that. I see your question, Gary, or Cameron, excuse me, on oil. We'll take a quick run on both of these, but here's what gold looks like on the daily. Look, at the end of the day, a stronger dollar would have been, I think, or had they moved on rates, I think you would have seen the real gold bear trade kick right back in. The fact that we didn't see that, or we didn't see them move on rates, suggests that there is concern still. We're still within the initial monthly opening range high. So in actuality, we just came to test the opening range high and it held as resistance and we're moving off. So for me, the upside bias that we gave last week with that breakout of basic trendline resistance off the August high, as basic as it gets, and this trigger, that's sort of played its course now. The initial target was 11,042. The high was 11,041.60, whatever. We won't split hairs. But here we are turning around. So it's a range, and I think you have to treat it as such, Bernard, until we clear this. The only thing that would invalidate the broader downside trend would be a break above 11,047. That's the actual stretch high for the month. And it's the operative upper median line parallel for the formation that we've been in since last year. I mean, it's as complicated as people want to make this trade, guys. It's really not all that complicated. We're in the downtrend. Every time it comes near the resistance, it turns over. I'd rather be selling rallies. If you're a scalper like me, a situation like last week was a given. You're coming up against major key support. That long side was definitely a scalp I would have been interested in playing if I would have, if I played this intraday, which I necessarily don't. But now you're right back near resistance. Look for the pullback. Look for the pullback. Here's what gold looks like, just to give you a picture. And I always like to do this on the weekly. Okay, just to put things in perspective on where we are alongside the daily. Okay, that 50 region, so important. Okay, so important. Basic trendline resistance or support. Now resistance comes in just higher. There's the median line that we're looking at here. There's the 50% retracement from the decline just off that high that we made in May. It's all stacked up right here. Key support, 10,098 right here. Guess what? That's the low week close as well. So not only is it the 786 off the low, the 100 off the high, but it's also the low week close, which we often will put a lot of emphasis on. So either way you look at it, at this, guys, the low day close comes there too. So in all these major stretches, we've seen major volatility, major stretches in price, the closes, which seem to solidify where the market has really settled, continues to be highlighted right into 10,098. So right now, you're looking at a $50 range for gold that you want to play in. Until we clear that, no longer term assertions can be made, period. And a lot of this is based on the CPI figures and expectations on interest rates, the biggest two movers for gold. Now, the risk-on, risk-off trade might kick in, especially if we see risk really turn over more aggressively. But that said, this is the range that you want to focus on right now. All right. Bernard says, thank you. Very helpful. You got that, Bernard. Cameron, real quick look at crude. Before we wrap things up for today, here's what crude looks like. That's UK oil, US oil. Similar setup in that you just need to respect the range and watch for the range clear. You're either looking for a break above 47.20, essentially that 38.2, which also coincides with the median line off of the, that's funny because that's actually the yearly highs, or clear-cut support at 43.50. And that's a 50% off the low and also a 236 off the high, which we wouldn't typically highlight except for the fact that you have that convergence there, and it's also the monthly opening range low. So same thing here, man. For both commodities, you just got to watch for this range break. When you get the range break, it'll be a move, guys. Don't think, oh, I got to do something. This is too boring. Look what happened back in May and June when we finally broke that 2-month long range. Okay, look what happened back into February, into start of March. That was a 5-week range. Finally gave us a nice downside play. So we'll get the conviction break. You just need to be a little bit more patient, I think, before both of these give us the move we're looking for. Right, a lot of these commodities, even copper, although copper today looks like it wants to make a little bit more of an assertive move, seem to be holding these sort of near-term ranges. Here's the monthly opening range low coming into support on the near term. And in fact, if we take a retracement, I bet you that'll be like the 618. Oh, just above. Okay, we don't need that. You get the picture. All right, so guys, we will wrap it up there. I'm over on time. U.S. cash markets just kicking off at this point. Keep in mind, again, we're light on event risk. Watch dollar price action and the dollar index. I think that's going to be the strongest tell that we have to start off the week here, especially with what we're seeing in broader risk and the steep turnover at this point. NASDAQ down 63 points. Let's see. And Dow Jones down 271. So we'll continue to see if risk presses lower, but as it does, look for the dollar to remain rather well supported into the open of the U.S. session. All right, we'll see you tomorrow morning, 8:30. Best of luck trading, guys. We'll see you then. Cheers.